held the same or increase, but not reduce it any further, because that would further push inflation up because of the ease of money flowing. So it's bearish for gold when that happens.
Yeah, it is bearish for gold. If the
So if
PMI
everyone
higher or lower?
is higher,
Higher.
Yeah.
Yes. Yes, yes, yes. You
Because
guys don't
everyone's
need me.
anticipating that. I think everyone's also pricing in the fact that the interest rates will start tapering off anytime soon, but then any inflationary data coming out can push that date further out. So it'll sort of be hold it for a longer period of time, which may be bearish for gold in that case in terms of sentiment.
Absolutely. You see, guys, it's not rocket science. Everyone can do the same analysis. Okay, so what is the other scenario, the potential scenario? Now we talked about the higher PMI. What is the other scenario?
So I can say something, but I was going to give other people a chance because there's a lot on there, aren't there? Maybe a couple other people want to talk up.
To peek on the chart. Yeah.
No, I was just saying maybe someone. There's quite a few people attending. I wanted to give someone else a chance because I don't want to.
Yeah. Yeah. The thing is, the main people are too afraid to join the discussion, even though they, there's new. Don't be afraid to say something that you feel is stupid. It's not stupid.
Yeah, there's no silly questions, there's no silly answers, because we're all learning, aren't we?
Yeah. Stupid is only the one who doesn't ask. No one? Oh, come on, guys. I should just start a signal service.
If no one joins in, I'll do it, but I was hoping someone else might.
Do it. Do it then, James.
Okay, so if the PMI comes in lower than expected, that's deflationary. That would mean that interest rates can potentially reduce quicker than anticipated, which is good for gold because it reduces the opportunity cost of holding gold.
Yes. So James first mentioned the PMI higher, which is bearish for gold, very, very bearish. And then we have the second scenario, which is lower PMI, which is going to be bullish for gold. And we have 7 minutes until PMI, ladies and gentlemen. Now it's only a Chicago PMI, so it's not a ISM PMI, but it is still a PMI, so it's an important thing. Even the JOLTS job openings, not a major labor market data, but it is important. So it's not an NFP or an ADP, but we're going to pay attention because the JOLTS job openings is going to be a good data, and the ADP non-farm employment tomorrow, which is going to or are going to help us to forecast NFP. It's very important. We're not here to capitalize too much on today's data, but mostly to gather some information about the potential outcome for the NFP on Friday. Two positions open, GBP Japanese yen and gold. Gold currently stuck at the current price level, 1963. It looks like it's going to break through if we have a lower PMI, but generally speaking is in a downtrend because of the inflationary data constantly printed. The other position, and what to expect on gold, not too sure about it, to be honest. We still have the debt ceiling issue, which is isn't making it easy to trade these days because of the politics involved. GBP Japanese yen is the other trade. The reason for the GBP Japanese yen trade, who can tell me what was the reason why I entered into GJ long all week?
Because I think it don't affect the market, right? I mean, news much.
No. It's the interest rate differential. So yes, for a long time, obviously the UK is offering much higher yields than Japan, but recently the UK printed ridiculously inflationary data, and the inflation itself is back to double digits, so it is one of the worst within the developed economies. And the US is, stopped with the rate hikes. The UK is just really start to rack up the interest rate increases. So what it means is, when the UK starts to increase interest rate, it's going to widen the gap, the interest rate differential, even further, and it's going to put the UK into a comparative advantage against the US, Germany, Europe, everyone. And if you look at the poor yen, the interest rate on the poor yen is below zero for like decades. Now, and because the UK is going to be in a comparative advantage due to the higher interest rate, that's why I entered into long position on GBP Japanese yen, because of the interest rate differential.
Good afternoon, everyone.
Bram, how you doing, brother?
Good. I'm just waiting. I've got a site meeting. I'm just waiting for people to come. So, I've got two buys, DJ and gold. So I'm in profits. Was thinking, do I need to put TP now because of my loss yesterday? Put a percentage back, or I bought it 1957 and other one 62. I've made it break even anyway, so I can't lose. But it just do I take the money that's on the table, or?
Whoa! Look at gold. Jesus Christ, it's pumping prior to PMI.
Yeah, just pump now.
Woo-hoo-hoo-hoo-hoo.
That's pumping. My word, that's good.
Baby.
Okay, I'm gonna lock in some profits on gold.
I'm closing gold.
Yeah, it's up 40-50 pips.
That's
So I'm going to lock in profits. Jesus Christ. On GJ as well, I'm going to lock in some profit. TIS told us that gold is gonna go up, then GJ drop. Well, thank you so much. Putting out from our misery, T.I.S. How many I have? Okay, I'm going to close half of GJ. No, actually, more, because that's big moolah.
Close everything.
Whoa, did you enter the finish the day in profit?
Yeah, I've made 50% back the loss yesterday, so I'm 1.5% back. I'm good.
Very nice. Well done, Bram.
I'm happy. I'll just stay out now. Yay. And that happens when I listen to the briefing in the morning. I know what to do.
What?
Good example of attending
Put a
briefing.
gold mood before event itself.
What did you mentioned the morning briefing? You made some profit because of the morning briefing. What made you profit listening to the morning briefing?
Just to understand where the price levels are and what we're looking at, like the interest rate you explain, it's saying, oh, it's gonna retest so that we can buy or it's a good chance, you know. So
We have a voting because
give
we
you the
have
confidence.
conflicting data.
Yeah. Yeah.
Very good, very good. Yeah, morning briefing is a good way to start the day. It gives you most likely, hopefully, a clear view about what's ahead in the market. For example, the PMI, which is coming up in 1 minute, ladies and gentlemen. And actually, when is it coming up? 28 seconds. So we're going to have the PMI coming up. Morning briefing gives you a good insight about how to trade economic data. And we already have the cheat sheet. And we know how to trade, which is coming up in 8, 7, 6, 5, 4, 3, 2, and 1. So looking at the data, Chicago PMI, 1, 2, and 3, doesn't want to come up. Looking at the data, gold is edging a little higher. Data is still not out. Recently, the data is very slow, the data printing. Okay. It's been stuck. Hasn't come out yet. Going to do a refresh.
40.4.
Lower than expected, huh? 40.4.
40.4 on Chicago PMI. That's quite deflationary, which is good for gold. Gold in theory should go higher because of the deflationary data. What do you use? Investing.com or any other calendar? Because in mine it doesn't show.
Wagwan, Thomas, Wagwan.
Wagwan. Freaking economic investing.com. Okay, I'm gonna go back to TradingView to see the open position. Well, gold is running in 73 pips. Data came out in deflationary, so it's good. TIS, the magician, gave us a whole reason about why gold should reach the 2050. It's all technicalities, which it's a wonderful thing, buddy, but unfortunately it's not technicals that's driving the market. It's fundamentals mostly. But thank you for the input. I appreciate. He says that it gets to 1975, but not to buy a lot. In the long term, gold should get to at least 2050, but I have no target. But I have a target of 2155. Also on the daily, you can draw a fib from the last high to low, higher high. Anyway, it's just a Fibonacci thing. But 2155, I need to see some more reasoning other than, you know, Fibonacci retracement, because it's not Fibonacci that's moving the market. Yeah, I'm not going to try it. It's fundamental, so you need to give me some reasoning. Now, if you look at the fundamentals, you don't need to welcome me, brother. I didn't ask it. But anyway, so if you look at the fundamental reasons, the US is about to end the monetary tightening phase out. That is a bullish factor, so that lines up with the IS's analysis. And confirms that, you know, gold should go higher. On the other hand, we have the debt ceiling agreement, which if you have an agreement on debt ceiling, in theory, that should push down gold. The question is the narrative going to be stronger on the debt ceiling resolution in the US or the inflation worry? And also, if inflation starts to come down, then in theory, it should push gold a little bit higher, but 2155 is just maybe too much. Maybe too much. Realistically, I think gold can revisit 2000. But, you know, the thing is that fundamentals changing day by day. Alright, gold has reached 90 pips, ladies and gentlemen. So make sure you take some profit.
Keeps getting higher.
It's getting bigger and bigger. Alright, GJ is pulling back a little bit. Now, is it going to be a fake out? Or is it going to be a valid breakout? We had the descending channel, and now just talking about the technicalities. We don't have any resolution or agreement on the debt ceiling, which is good for gold. Uncertainty is very good for gold. Gold is a hedging asset, which means that if there is uncertainty, if traders and investors are worried, they're going to look into gold as a historical and fundamental hedging asset. It's an escape asset, escape from uncertainty. We just broke out from this descending channel. Not sure if it's a fake out, because in order to qualify for a breakout, I think 1979 needs to be where it should close, and then have a retest. Those who missed today's setup because you're not members, or I don't know, for some reason, and if you want to jump on now, the best chance is, if it's a valid breakout, then wait for the other 4-hour candle to close, which is quite a few hours away. If you go down to lower time frame, it could pull back anytime below. If it comes back below this trend line, or 1969, then it is just a fake out, similar to what happened right here. What do you think about the recent developments on the market, fundamentally, economically, macroeconomics? There's so much uncertainty, it's difficult to trade in it. Market is just all over the place, especially stocks. Oh my God, that's the worst.
Thomas, I had a question. So, with there's of course there's emphasis on the debt ceiling, but it's a given that through push and pull they will eventually sign it off.
Yeah.
Because if they don't, you're looking at a worldwide crisis, because the dollar will lose significant holding. It's like going back to the Bretton Woods time, right? So in a way, that's their own. In a way, think about it. It's the same concept, right? That keeps the dollar going, because it's a consumption economy. So I'm a strong believer that yes, they will do it, because the same thing happened. I think it was during the Obama administration, 2000. I think it was 2010, I think, or 12. I can't remember clearly, but it happened even then, and they extended it out. So I don't know if it makes sense to buy gold just based on the debt ceiling. I would much rather short gold, because I know it's going to get through after a huge pump up.
Yeah. The thing is that there are many variables which are affecting not just gold market, but any given financial market, any asset classes, and just focusing on the debt ceiling, that story is going to fade away in a few weeks, a few months. So when the debt ceiling is risen, that means that more dollar could potentially flood the market. Doesn't mean it's going to flood immediately. But eventually they're going to use that extra buffer to pay the debt. So the more dollar is inflationary, but it doesn't mean it's going to be inflationary immediately. So essentially it should be bearish for gold if you look at the money supply, which could potentially enter the market. On the other hand, because the debt ceiling has been raised and gold is used as an escape for investors and traders, as a safe haven asset, it will be no longer necessary to hold speculative long positions, because everything is fine. The default of the US, the potential default of the US, is averted. So now you have two opposing arguments of long and short of gold, which is, it depends which one you believe stronger. Is that the US is not going to default, everything is sorted with the debt talks, hence gold should be sold, or because the amount of money is flooding the market in the long run should cause more inflation, which is you should buy gold. So there are many theories and speculations. But I think it's too long stretch, too far stretch. So we should focus on the immediate market reaction, and market sentiment. What story is taking over? What narrative is dominating the market at a given day when you sit down and trade?
Got it. Yeah. Thanks.
There's a lot of things to watch. Okay, I'm going to take more money off the table.
Make the money, take the money.
Mm-hmm.
JOLTS data in 5 minutes.
Stephen Christie, very good question. The alpha effects, based on your experience, do you think trading based on fundamentals sometimes clouds your head cause of so many things we need to consider? Absolutely 100,000,000 times yes. It can cloud judgment because economists, especially economists, are the worst. I'm an economist and I had this mistake when I started trading. I thought I knew everything. I was coming out from university, fucking Wolf of Wall Street. Then I started trading, you know, as soon as got the student loan, boom, £1,000 down the toilet. Got a new job, fancy job, assistant on a trading desk, good salary. I couldn't trade because I thought I knew everything by the textbook. Look at how many books I have, what I read. One thing I learned at university is that what you learn in books and they teach about trading, markets don't work in reality, in real life. Markets work completely differently. And yes, training purely on fundamentals can cloud your judgment because, as we just spoke with my colleague recently, you need to distinguish your strategy first. You need to come up with a strategy, a macroeconomic strategy. And you need to distinguish, is it a long-term, medium-term, or short-term? Remember that you guys and me are day traders. So we can speculate at what's going to happen with the dollar in the long term, etc., etc. But it's not going to make money today. Because it may happen down the line in 6 months or 2 years, but you need to focus on the market sentiment, which isn't in a speculation, it just comes. The market is going to pick up a story, a narrative is going to turn from bearish to bullish in a couple of minutes. And then you need to be able to understand why the market is turning and pivoting and reacting. You need to be able to jump on to that narrative.
Well said, Thomas.
Alright, it looks like that we squeezed every juice. That was all the NAFTA in and gold. And GJ, looks like it's going to reverse. And we have another data coming up, ladies and gentlemen, in 7 minutes. Actually, 3 minutes it should be. Yes, 2 minutes. JOLTS job openings. Now, let's come up with a strategy, analysis, forecast in less than 2 minutes. We can do it. So if the JOLTS job openings going to print a higher number than the forecast, 9.7 million, is it inflationary or deflationary?
A bit inflationary.
Inflationary, absolutely. So it's going to be bearish for gold. Now, if the PMI up, the JOLTS is going to be lowered, it's going to be deflationary, so it's going to lift up gold. Simple as that. And you can see gold is already started to pull back. So depending on the data, and this position is now out of the window, depending on the data, which we have in 1 minute, we have a new playing field. JOLTS job opening is coming up now, and if the data is going to be lower, gold is going to go higher. If the data is higher, gold is going to come back within descending channel and continue downwards. So hence, I'm reducing the position now further on gold. No, actually I have one lot, that can stay. And we have 30 seconds, ladies and gentlemen, until the JOLTS job openings. Again, were lucky. We had 2 economic data coming out today. PMI managed to catch 70 pips or 80 pips. But we have the JOLTS job openings, which is labor market data, very important. And depending on the outcome, here we have the potential scenarios. And the data is coming up in 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. And the data is voila, voila, voila. Oh, and gold has pulled down. Perfect timing to close down the position. Shout out the data if you can see it, because investing.com is very slow today and I cannot see the data. If anyone can see JOLTS job openings, just shout it out.
10.1.
10.1. That is fucking inflationary. Sell gold, sell gold. Changing into sell gold. Yeah, it is very inflationary. So now we're changing into a sell. Yes, yes, yes. That's going to be very inflationary data. So gold it's a bit late entry, but I think it's going to come back down 1930 hopefully. Oh, Victor Alerci told sold. Everyone is just an economist these days, and you know, not even economists, just magicians. They can see the future without knowing what the fucking data is. Alright, GJ is pumping up, ladies and gentlemen. Very nice. Quickly. Yeah, GJ is going to hit the TP. Okay, I still don't see the data on investing.com. I should change the economic calendar. Okay, 10.1 is very inflationary. So in theory, that should push down gold. Entered into a sell. Is there any other data coming out later? Service sector outlook. Never traded this one. Do you know what's this Texas service sector outlook?
No data. There's just the speeches.
Have you traded before?
No. Not these ones anyways. Harker and Jefferson. Never heard of them.
Quickly, let me just send out the analysis. The hell? You crazy? Stupid. Investing.com. Tradingview.com. Alright. So now just waiting for gold to come lower. Someone says Mark Dom says no reaction. There was a reaction, which let me show you on TradingView. Immediate reaction was the market interpreted as highly inflationary data, so it was an immediate drop of 100 pips. I think that's a pretty strong reaction, and that is signaling the direction. And gold is now back into the descending channel, which technicals play an important part of trading, but fundamentally speaking, the data that just came out, JOLTS job opening, extremely inflationary. Look at the number, 10.1 million versus 9.7. Now, this means that labor market data, if you have a higher JOLTS job openings, means it's the economy is overheating. It's full of jobs. It has the ability to suck up all the excess unemployment, which is going to lead to wage inflation. Wage inflation, in turn, is going to lead into higher interest rate, higher inflation, and then higher interest rate. So this is the logical reasoning why I entered into a sell. Heinz Smith, Tamás, on my phone, so can't ask question on Zoom, but do you think the gap in US 30 on the top will be filled? Can be seen on the 1 hour chart. It depends. It depends on whether it's a valid gap, where you can see, not every broker has a gap. Let me just see US 30. No, I don't think it's going to be filled. I think I know which gap you're mentioning, but I think US 30 is going to be sold off because of the inflationary data. Now, inflation is bad for US companies. US market is open now.
I agree.
Hey, Gian, how you doing? Should we go short on US 30?
Yeah, I'm shorting.
Oh, bad boy. Okay, I entered into short in US 30. Targeting somewhere below. It's going to be new lower high and lower low. It's a very strange day today. It's always the month end.
Wagwan Thomas.
Who is that?
Jordan.
How you doing, brother?
Doing good, doing good.
Wagwan Jamaica.
Ah, there you go.
Very good. Oh, gold, you miserable fucking cunt. Stephen Christie again. Do you think while trading, cutting the noise or cutting out the fundamentals and trading only based on technical strategy backed by stats can give you a mental edge? Don't know. Brother, if, just trading on technicals, if it's a proven, backtested strategy, for example, a breakout strategy that's highly effective, yes, maybe. But, trading without fundamentals, it's like driving a car without legs. Why is gold not dropping? Shame I missed that 100 pip drop, but we had a 200 pip bump. Now, those who wish to get daily morning briefings to fundamental analysis, feel free. You can join via the link I'm just sending out to the YouTube chat. Hakan Bassaran, gold make me crazy. Yeah, it does every single time, doesn't it? Just a cunt. I mean, it doesn't matter what asset you trade, the sooner or later it's going to eat you up. Every single assets, US30, GJ, GU. I'm pretty sure all of you have those assets which you promised that you're not going to trade because you burnt yourself. Gold is the same, but for some reason people keep coming back to gold. It's love-hate relationship. All right. Slowly cutting the position into half, reducing the risk on gold because it's a cunt. It's not playing nice today. So the fundamental macroeconomic analysis is that gold is definitely short based on the JOLTS job opening data, which just came out about 10 minutes ago. Let's quickly go back to the economic calendar. So JOLTS job opening came out, highly inflationary. Now we have a few more data coming out, but I think the heavyweights are going to be Harker and Jefferson, or the central banker speeches later on. And we have a beige book, which is another important thing, which is the Federal Reserve beige book, is a report on the current economic condition in each of the 12 federal districts. Now it's very important. It's a very long document, so I won't live trade it because it's a very long document, and it will be relevant tomorrow when someone else read it. You don't have to read it, you just go to investing.com, read the summary, or I would recommend Financial Times subscribing, or Bloomberg, because for this amount of money you get the highest level of financial journalism ever, and you can learn something. So data was inflationary. In theory, gold should go down because inflationary data will bring more interest rate increases. Yet gold pulled down immediately, 100 pip drop, pulled back down below the trend line in a descending channel, which is good. Now it confirmed that this was a fake out, and chances are high the price is going to stay below the trend line within the channel, and it's going to revisit 1930 if we have more inflationary data. And if you look at the whole month and April, everything was inflationary since the beginning of May. All data was inflationary, hence there is a downward trend, and that trend hasn't been broken. JOLTS just confirmed again that there is still inflationary variables in the economy. So selling gold, but only a small position because, you know, gold is being a cunt now. And coming back, let's go back to the open positions. And guys, if you haven't already joined my Telegram, link in the chat, going in 3, 2, 1, bang. Join my Telegram channel. The GJ trade 2 days ago, which gained about 100 pips, shared in the Telegram. Sometimes I do giveaway analysis, free analysis for everyone, especially before high impact events. I do the full macro scenario analysis, hopefully to help everyone else who are not members. And boring day, last day of the month. I have a feeling that during Power Hour, just before the New York Stock Exchange close, the market is going to go crazy. We're going to see some heavy drops. All right, gold is now pulling back nicely.
Nasdaq is melting,
Uh,
going down faster than US 30.
yeah, because of the tech. There are some bigger companies. Essentially, US 30 is going to catch up. Let's have a look on Nasdaq. Yeah. Put a sell on Nasdaq as well. Right, gold is catching up. Now, in break even, small profit. What's up, Andrew?
Oh no, I just closed my gold sell just because I do think there is a little bit of gold could just potentially just revisit that area one more time.
Yeah, always. Retest is always on the table.
Yeah, exactly. Especially after such a impulsive move.
It was only 100 pips. It wasn't that impulsive.
Okay. Yeah, that's true. After a nice little drop.
Impulsive was, that 400-500 pip on NFP days when we had some. Alright, ladies and gentlemen, if you're watching the stream, if you like the content, if you get any value out of the conversation, please hit the like button, and don't forget to subscribe. This will show me, gives me good feedback that I should carry on with dropping these gems, talking about macroeconomics and fundamentals, and do the live streams. Hey, Andrew Gilo just commented, love this. Very good. Andrew G.
Just had to drop a little like.
Yay. Did you hit the like button, brother?
Of course. Always.
Very good. Very good. Okay, let's have a look on gold on a lower time frame. And this is the kind of retest which my beloved colleague was talking about, Andrew G. The retest, we had an impulse move and price is now retesting that area. It's giving us very nice head and shoulder pattern on the M1 time frame. Very good. BKFX Trading says there will be no reaction on gold from a debt ceiling increase. It happens all the time. It does happen all the time, brother, but you're forgetting that currently, because this cat and mouse play, the indecisiveness, the uncertainty, helped to push up gold. It went up like $50 or $60 just because of the debt ceiling issues between Joe Biden and McCarthy. As soon as they come to an agreement, gold is going to react. Because of the uncertainty, many traders and investors run into safe haven assets such as JOLTS. And if you look at the yields, when on Saturday, when there was an agreement, announcement from McCarthy and Biden that they are on the good track to come up with the agreement, the short end of the yield curve, the 2-year, immediately melted. So there will be a reaction. Okay, US 30 is in position. Now GJ seems like wants to come down, so I'm going to start to reduce the position. I'm going to lock in 800 pounds on GJ. I'm going to leave the other position because I have higher plans with GJ. And gold is just being a cunt. So, as discussed, and while you're listening, quickly please hit the like button, the thumbs up button on YouTube. So while we wait for something miraculous to happen on the last day of the month, entered into short position, explaining the reasoning why I'm short on gold. So we had the JOLTS job openings, which came out 10.1 million versus 9.7, 9.7 forecast and previous one. Now this extra 0.4 million, 400,000 JOLTS job openings is inflationary, very much inflationary. And right now, the US is struggling with wage inflation. All economies, in fact, struggling with wage inflation and other kind of inflation, raw materials, etc. But wage inflation, because of the aging population, the curbed migration laws in the US, etc., created a supply side shock. But it's a negative shock because there aren't enough workers in the US. So the low job market, you can see that how strong it's creating more jobs and able to suck up all the excess unemployed people in the US, which leaves wage inflation. And inflation is going to bring more interest rate increases, and more interest rate increase or holding the rates longer at the current level, which was announced by the Fed, is bearish for gold. Whew. That was a long explanation. GBP Japanese yen. This is second or third long entry this week. The main reason is the interest rate differential. The UK has printed a inflationary number. Oh, UK inflation. There you go. So Britain's among most gloomy on inflation prospects. UK shop price inflation rises to record high, industry data shows. This came out on Monday. As soon as the UK, every single time the UK prints inflationary data, disappointing data, I just go along on GJ. Because if you look at the interest rate differential between the two countries, at the bottom, this is Japan, they're giving negative interest rate. And the UK is about to take over the crown, the first place from the US by giving the highest interest rate on the market right now. Look at the short gilts versus the short US 2-year treasury, almost the same head to head. The 10-year, the long end, is already went ahead the US 10-year. So the UK, the sterling is going to strengthen because of the interest rate differential. There will be higher demand for sterling than Japanese yen in the longer term. And that's why I'm speculative long on GBP Japanese yen. Again, explain gold, heavily inflationary data, which pushed back gold into this descending channel, if you want to talk technicals. Now, anyway, we made some money. Still struggling with gold a little bit, but generally speaking, GJ was a hit. Gold long position was, I think it was 80 or 90 pips. There was 170 pips actually to the pump. So overall, closing the day in profit. Guys, thank you so much. We will have a live trading tomorrow. That's for the team, because we're going to have ADP non-farm employment tomorrow. Do you want to live trade?
Sure, I do.
Yeah.
Bring it on.
Bring it on.
Thursday, ADP. Oh shit, I have to start early tomorrow. Fuck. Look at how much data we have. Alright, we're going to have a live trading session, but I won't have a morning briefing tomorrow because we'll be busy. But we can do the live trading tomorrow, alright?
Perfect. Thank you very much, Thomas.
See you later.
very much,
Thank you,
Alligator.
Thank you, Thomas.
Bye.
Bye-bye.
Thank you. Bye bye.
Thank you. Thank you.
Bye-bye. Alright, people watching the stream, thank you so much for watching. Please hit the like button on YouTube if you like the conversation. If you would like to join the Alpha community to get daily morning briefings, if you want to live trade twice a day with me, you want to see the positions I have, let me just show you what you get for the monthly, not monthly, the one lifetime membership. So basically you get daily morning briefings, and you get to see my entries before the actual move. I share my MetaTrader screen, and I also explain everything from the macro perspective. Now, I'm a professional trader. I used to trade at hedge funds, and I was a risk manager, capital markets risk manager for one of the biggest Eastern European bank. If you want to see my intake on the markets on a daily basis, live every day, 8:30 in the morning, explaining how to trade economic data, how to trade macroeconomics and fundamentals, then your only chance, because currently the joining is closed, if you go to the website, there is no joining. It's closed down, all sold out. The only way, I will reopen in a few days or weeks, the only way right now to join, if you look at the chat right now and use that link, there's 2 spaces available at the 50% discount. Only 2 spaces. It's your discount, take it up. Anyway, thank you so much guys for today. That's it. See you later. This is the Alpha FX.